Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Hello everyone, welcome back to another episode of Broker Daily Uncut. Your host Jack Campbell joining you on a Monday morning. It's the eve of the Broker Innovation Summit in Melbourne, so I'll be heading down to Melbourne this Savo. Hopefully it's not too chilly down there, but yeah, looking forward for a big day after a successful Sydney summit and hoping to see a few people there. I'll be running a podcast booth down there and pulling some people off the floor in to come chat. So if you spot me there and want to have a chat, grab me and you can jump on the podcast. But anyway, today's podcast, I have Eva, if you missed last week, from Finny Mortgages, is jumping on now for the continuation of this podcast to provide a bit of broker insights. And as usual, I've got Alex here. Welcome, team. How are we doing?
Great, exciting. Second episode.
Podcast,
yeah, it's good.
Oh, but you're a veteran of podcasts. You've done loads of stuff on the consumer front. So.
Yeah, I think it's very interesting for me to comment, I guess, on the industry as a whole.
Yeah, it is. Yeah, it's like, I've listened to many of your podcasts where you're talking to consumers, but having as a media business, look, Jack's journo. I work in media. I can't claim to be a journalist. Phil, journo by trade, but a long way away from the coalface. So having a relevant viewpoint, working in mortgage and finance broking is valuable. It's good to get perspective. We don't always know what's happening, what's going on. We know what we're reporting on. We know the news that comes through to us, but knowing what's happening, I think a lot of brokers, regardless of the news that the advisor and the other media channels deliver, have got other challenges that are more present to them, right? As you will know with the team.
That's right. Yeah. Stuff we don't even know sometimes until we sit in the news weeks later. Yeah, definitely.
Yeah, I think it goes both ways because a lot of the times brokers will come to me with stuff that's happening in and around the industry that I haven't heard of. So it's good to have those conversations with brokers. And, just as we kick off this morning, a bit of news coming in already and ASIC cracking down on the private credit sector. So over the next few months has a few plans to release some reports and some guidance for this industry and says it's a bit too inconsistent and full of risk. Is that something you've noticed ever over the years, private credit, a bit too inconsistent?
Yeah, look, I think the idea of some companies in that sector being a bit sharky is not completely false. There are companies out there that would just, I guess, entertain the idea that you can get a loan, charge you along the way, and then they never had any intention to approve anything. So I've seen that. I know about that. I think it's a great thing that it's going to be a bit of dig into that to make sure it's...
I would imagine that you don't get many borrowers that are looking to tap into that type of lending. And when you do, you can't compare because there may only be one lender and they're going to kind of look at the deal that comes their way and they're going to go, well, this is what we're going to offer, right? I'd imagine. Is that how it works? Yeah,
that's right. The thing is we are under so much compliance and then all of a sudden it's already all removed.
Yeah.
So we don't know, they send literally a letter of offer within sometimes minutes of us talking through the deal with, oh, this is the condition, but do they actually have any intention of going through with it? But people have to go ahead by paying a fee, paying an evaluation, paying...
Yeah.
So
we've seen this in the commercial front as well.
Yeah,
we talked about this, again, news to me because I don't work as a broker, but I know that when we had our commercial brokers roundtable, finance brokers roundtable, this was a big issue because you can end up with, particularly in the sort of in the commercial space, a lot of lenders are very, very different, and you don't necessarily know if you've got big banks in the commercial space and other very well-established non-bank lenders, but then you can end up with the private lenders and you're paying upfront fees and you don't really quite know what you're getting into.
Yeah, that's definitely something I've seen. And I think it's great if ASIC can...
What's the way forward for ASIC, Jack? Where's this go?
So November, they have a big plan to release a bunch of reports and guidance to support the industry, I suppose. And then it's the regulators kind of called on private credit providers themselves to lead the change and be at the forefront of it. So where it goes, we'll see over the next couple months. I think it's important because since I've jumped on Broker Daily, there's been time and time again reports coming out of a dodgy private credit lender. And I think one of the first sort of deep dives I did when I jumped on Broker Daily was analysing this industry, and a lot of private credit providers who were doing the right thing were frustrated by these ones that were doing bad things.
I'd like to dig into this a bit deeper, sort of looking through the looking off the podcast line of things, because there are going to be, it's a valuable sector, it's an important sector for borrowers. And here's the thing, right? If you're a broker that specialises in private credit, if that's where you specialise, you're going to have a pretty good idea generally of who's a good operator and who isn't. But there are going to be instances where brokers have a customer where suddenly you need to dip into that area. So, and then it gets difficult, right? If you're not working with private credit and private lenders all the time, knowing who's who and what's what can be difficult. So I might look at going into this, maybe have a little bit of a report on the sector, give some of the lenders an opportunity to have a say, and also brokers that work with them. So yeah, we'll look into that later on.
Yeah, it'll be interesting to see where it goes. So the next couple of months, you can definitely see some stuff from ASIC coming out. We'll go to some more news. We'll just go to a quick break. We'll be back after this. And we're back with Broker Daily Uncut. Some other things that were going on in the news lately. A report came out and showed that many young Aussies were unaware that lenders check credit reports. I would have thought that that'd be top of mind when you were going for a loan, but apparently really? 15% of Gen Z were unaware. Is that something that you've come across in your day-to-day ever?
Yeah. Some of them don't even know what's a credit report, and like, what can they actually know? I applied for this, or I've got that. Like, yeah, if you don't tell me, we'll find out.
But it's been the same since the dawn of time. The first loan, the first property that I bought, I'm going back to the late 90s, dead set. The developer, I bought an off the plan apartment, and the developer, the head of sales there, said to me, he said, don't tell your mortgage lender anything. Yeah. Don't tell them anything. That's what he told me.
Yeah,
I went, oh, okay. Not that I had anything that I couldn't discuss. And I bought a couple of properties, and they say, well, don't tell them about the other properties, which is just madness, It's, I think some people don't realise, and I'm going back in the 90s, it's probably harder to get the data.
It would be difficult now. Like, I think it used to be a time where you could hide some things. But now it would be very, very hard. And people forget also what they applied for, whether it's a solar panel or a Maya credit card or something from Coles that they needed that's in a drawer.
But it's a big liability for the broker though, right? If you don't...
we do check. I do a credit report on everybody, yeah.
But it'd be harder now because everything's digital. There's a record of everything, right?
Yeah, that's right. Yeah, and it's good for, I think, everybody to know their credit score, know how to improve their credit score. Because you might want to apply for a loan and actually just knock back just based on that number. And it's free to check. It's easy to check. So, it would be good for... I don't know how we can educate people to know a bit more about that.
It's a lot hard. I think, when I was borrowing, I was in my late 20s. I wasn't a young investor. But, I mean, now, the world was quite a simple place then. I grew up in an era where you didn't take on any debt unless you had to. I didn't even have a credit card, but like you look at the subscriptions that people have got, that I
think they know sometimes it's credit, like Easy Pay, Afterpay, Klarna, whatever. I don't think they realize it's a credit facility.
But you end up with with a gazillion different little subscriptions to sport, to your streaming. You can end up you end up stitched up all over the place. Subscriptions to Apple. I think it's tough for people buying now, particularly when they don't. It's a complex. It's just as complex as it always was. There are so many more pitfalls in terms of your sort of financial commitments and what's credit and what's debt and what isn't. And it's hard to unsubscribe from things, right?
Yeah, I think you just, and it's so easy to subscribe for it. Yeah. You don't even know it's happening.
Do 1 week's free trial.
Yes. And then, oops, I forgot.
We know.
With the rise of all these subscription services, have they had an impact on credit scores? Have you seen credit scores sort of get worse as the years go on?
Yeah, I think a lot of it is from Easy Pay and Afterpay and people buying online, and pay later. Basically, I think that's been a big borrowing capacity issue, for sure.
Yeah, well, I think that was another one regulators were cracking down on a little bit was the Easy Pay and Afterpay, buy now, pay later, because they do sting people. I know a lot of people throughout high school that didn't have much money that would rely on these services, and then they'd end up owing thousands because it would just get stung with interest.
Yeah, I guess it's a great way from those companies' perspective. It definitely gets people to spend more money and manage. It's like a mortgage, really. Just 30 years to pay it. But I don't think many people realize it's actually a credit facility against your name. I don't think they do know that. Yeah, it would be in the fine print.
Something for something for young Aussies to keep an eye on. Make sure that you're out there and aware that your credit reports will be checked when you're going for a loan. We'll just throw to another quick break. We'll be back into more content just after this. And we're back with Broker Daily Uncut. So a bit more news that came in this week was investor divestment, they called it. A lot of investors leaving the market, getting disillusioned. And Ever, I know that you guys on Finny have a pretty strong proposition with the investor market. Have you seen a bit of that lately, a bit of disillusionment amongst investors?
I read that article and I was actually quite surprised.
What was the source?
I think it's a lot from one buyer's agent.
Was it? Okay.
Yeah, I think a lot running from commentary on that person.
Yeah.
Obviously, there is numbers, and I'm sure he didn't, made up those numbers.
It was the Property Investment Professionals of Australia, a report.
PIPA.
Yeah.
I think there's a lot of politics around this, and I haven't spoken to PIPA, but talking to some of the representative bodies for real estate, talking to some of the major franchise groups in real estate, there is real concern about the pressure on investors when it comes to finding property as an investment vehicle. So the tenants' rights keep improving. It's obviously very costly in terms of tax. It's just getting harder for investors. But I think that investment property still represents a good opportunity. I wonder whether maybe it's an interesting thing, right? You've got an explosion of buyers agents. They're absolutely everywhere. They're being pumped out left, right and centre, day in, day out. And that can only really be because there is a demand for buyers agents. And most buyers agents operate on behalf of investors. There's a few that operate, sort of for owner-occupier. So I look at what's happening around me, with buyers agents gaining traction rapidly, and then you've got the sort of the rhetoric of organisations, and there are definitely. I know that talking to people in Melbourne that investors are disappearing left, right, and centre because it's just too hard to own an investment property, and it's becoming less attractive. But I think that they are potentially going to get replaced by new investors to the market. So I don't know.
I think that's what I see. Actually, a lot of people are selling properties where they had a lot of growth and actually buying in markets like Victoria.
Yeah.
Just to go at the bottom. So or changing assets, from residential to commercial. So the investors we've seen selling are selling because they want to buy something else and they want to move up and they want to keep going. So it's more of a strategic move than just I don't want to be an investor anymore.
Yeah, it's an interesting thing. I think when you've been investing for a period of time, you sort of wear all of the irritations with investment, and one of the problems is I think at the front end you get a lot of explosive nonsense about how much money you can make in property investment. And the reason why myself and Phil set up Smart Property Investment nearly 20 years ago was to dispel all the myths. I used to read reports from other media channels saying, see how this investor made $4 million in XYZ, which isn't true. They're ignoring all of the costs and they're often ignoring the mortgages. But the reality is, over a sustained period of time, property investment is a very steady and very stable way to build long-term wealth, done the right way.
What's the alternative anyway? You just do nothing?
Exactly, yeah.
It's not going to work either.
Bitcoin ever.
Bitcoin, that's right.
Yeah, go get some Bitcoin.
Okay.
Well, we're only talking last week. Commercial property, that's the new frontier for a lot of investors, yourself included, Alex.
Yeah, I will look through the help of Finny to move through my SMSF. I've started selling off my shares. I've closed my eyes and stuck a pin in the stock market and bought. But I'm going to sell. I'm selling them off as we speak, and I will look at moving into commercial in that area. And Phil's a massive advocate of commercial property, so I bought probably my last residential property. I say bought, still yet to settle on it, but I think my last residential property, commercial will be where I go. I think with cash flow, Look, I'm sure that there's challenges with commercial, and I think you can end up with bigger vacancy rates, and there's still liabilities around that. It's not like some hugely more attractive path. It's just a different vehicle to residential.
Yeah, I think there's been some of that. It's been hard lately last few years to get commercial lending on a lease doc basis, and I think it's coming back to being possible. So people are selling residential to buy commercial. We see a lot of that.
But I look at the auction clearance rates this week. I mean, the market's heating up very nicely. You know, Melbourne's running pretty hot, I would say. The reality is, though, you know, you talk to agents and it's still very patchy. You've still got vendors that are not putting their property on the market. Buyers are not spending over the odds. You've not got that real, you know, heat in the market where people are just snapping up anything. But it's warming up. It's improving. I think there's probably going to need to be a couple more interest rate cuts before you start to see the market really shift. But do you really want that? You know, like seeing markets suddenly rocketing forward doesn't really, you know, like agents who are selling get the benefit and vendors that are, but it's not a good thing for the market. You want a nice rolling kind of, you know, sort of growth and dips rather than rocketing up and, you know, tumbling down.
Yeah, well, it'll be interesting to see where it goes. We still have the expansion of the home guarantee scheme to come into effect from October, as well as potentially another rate cut in November if the experts are anything to go by. So we'll see how it goes. But unfortunately, all we have time for today. Thanks again for listening to another episode. If you want to check out more content, visit brokerdaily.au. If you want to reach me directly to chat about anything we talked about in this episode, that's editor@brokerdaily.au. Thanks again for listening.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.